Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and you're all welcome to visit the Bookmap Discord Trader Lab. Please give me a screen check in YouTube and the Bookmap Discord Trader Lab community. Great, thank you. Well, welcome everybody. This stream is about integrating Bookmap order flow tools with auction market theory using the volume profile as a chassis for structured trades. And these trades are available to everyone in the Bookmap Discord Trader Lab community, and there is no cost to access the Trader Lab and the resources that are available to developing traders. The Trader Lab is a community of like-minded traders who come together to leverage their collective experience. We've all gone down many different roads and paths, but a lot of them are very similar. The key becomes, do you really understand the business of trading, or is it just something you imagine it to be? Is the business of trading the right mix of time frames or indicators, or might there be something more to it? Is there a reason that most retail traders do not achieve longevity in the trading business? Are any of those things relevant to your choices and your beliefs? Now, the problem we have, of course, for all of us is when we have a belief, we're going to look and we'll be doing things that support the belief. That's just common sense. However, if we are misaligned with the actual business we're trying to participate in, no matter what we believe, we may actually make erroneous assumptions, which may actually become obstacles to our potential success in the business. And while past performance is never indicative of future results, and the outcome of any interaction with the other participants is absolutely random, this business, at least in my opinion, is not predicting what will happen. And I know most of us come into this business thinking that with the right indicators, the right time frames, or whatever it is, the right dartboard, that somehow we will be able to predict what's going to happen. Part of the need to predict is the need to avoid pain, the pain of loss, and the fight and flight mechanism, which is really under the hood. If the fight and flight mechanism, which is really good for survival of the species, is always operating, then on a conscious level, without really connecting the dots, you might say, you will be looking for certainty. And that is all predicated on this primal wiring to avoid the pain, the fear of loss, and the fear of the saber-toothed tiger. So if we can understand the psychological aspects of what drives us to make certain decisions, even the most fundamental decision about how we're going to approach the business and what we believe, is it possible our beliefs are really constructed based on other elements, not necessarily in line with the business. This is what the Trader Lab is about. So welcome to the Trader Lab. I hope you find the stream useful, and you're all invited to visit the Trader Lab. If you're in YouTube, there's a link in the bottom of YouTube. You can access the Trader Lab and all the resources. That's structured trades, statistics, a library of webinars, and of course, the Trader Lab community. General disclosure. All Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, but if we get into real time, we'll talk. And by the way, if you have questions, please post them in YouTube and the Bookmap Discord Trader Lab. I'm now going to take you into levels. The levels, these are available if you and what these are auction-based levels. And the thing about the auction, and all of this is available in the library of webinars. Remember, the Trader Lab, there's no cost to become part of Trader Lab. And there's a lot of additional education, stocks, options, crypto, of course, order flow with the high tier tool like Bookmap, Market maker behavior, algorithmic behavior, options, swing trading, wear a helmet, all of that. So let's take a look at auction. So what happened yesterday? Yesterday, we had a big sell-off at the end of the day. Now, let me take you into a couple statistics which might be important. Yesterday's settlement. So we closed, you might say, near the low of the planet. Then 53.05 is where the highest volume took place. That is, think of this like shopping. It's a retail price. So 53.05. So we have 53.05, we have the ETH mid, we have settlement. So those have statistical probabilities down below. We also, if you remember yesterday, we were on the long side and 95 was a target, which we achieved yesterday. Then we actually had an additional long from 95, and I think it was up, don't remember exactly where. Can't remember these things. Can't remember. Not important. So this is the ETH volume point of control. Why? And let's talk about why this might be relevant. If this was the highest volume, and think of it like shopping, wherever you have high volume, is where most participants, buyers and sellers, are willing to do business. And they do that because it's a fair price at the time. If we open higher, it might be saying this is too low. The other piece is in the ETH, this is the highest volume. So that might suggest, and I always like to have to say might, because the best you have in trading is maybe. This might be too low, might. And this is, since it's now high volume in retail, the buyers and sellers, the most of the volume is here where they're interacting. So maybe this now is the fair price, and this is too low. Now let's go a little further. And you say, really? And I'm going to say, yeah. What is this? This is our target. In fact, there was a potential target yesterday, and not necessarily for the day, but it was out there. When we broke down from the upper distribution in our big trend days down and everybody was jumping out the window, this was volume that was left behind. Logically, if this is too low from yesterday and this is too high last time we were up here, if we open and this is too low and the ETH is too low, what is our target? This is auction. It is this. So in the Trader Lab, the first trades based on the behavior and structured trades was longs. I'll show you those trades. Now, and what are the targets? If we get a long, statistically, the ETH high, yesterday's high, wherever that went, I think it's here, and this. This is a structured trade in Trader Lab. Is everybody with me? So we're going to start with that. And this is Trader Lab trading the auction. And the idea of an auction is to understand how the market works. Why does it do what it does? And how might you, at times, get in alignment with it? Now, grab a pen and paper. Remember these levels, 53.05 below, possible. This one we don't need to be thinking about at the moment. This is important. The first hour is low, and the first hour is high, which happens to be the high of the day. This was our target up above, 53, 50, whatever it is, 58-ish, horseshoes and hand grenades. And you got 05. And if we get below 05, there's more. You got the overnight mid, you got settlement. These are also possible, but they're not immediately on the radar. Now, let's go from here. And remember, write your questions down if you have them. So this is the retail price in the ETH, RTH open. And what did we do yesterday? We sold off into the close. What does that mean? Let's talk about what these things mean. There's shorts in the market, maybe additional sellers with the sell-off into the close, long liquidation, and who knows what else. And now we open higher, a price gap over settlement. When we open higher inside of the previous day's range, it sets up some possibilities. One is, well, first of all, let me give you some statistics. Write these down. You'll find this interesting. The previous close, and I call that the settlement, has a 69% probability. That's way below us. Now, that doesn't mean we'll ever get there. This is part of the joy. Way down here. I just showed it to you, but I'm just going to remind you. This, 69% probability. The ETH high, also a 69% probability. The previous point of control, which is this, has approximately a 67% probability. So, and the previous high, about a 55% probability. Now, those are just statistics, and you got to take everything in the sense of a big grain of salt, and also it is not the primary input. The primary input is market mechanics and participant behavior. If the market is short, which the statistics know nothing about, then we know the potential exists for a squeeze. As if you're in Trader Lab, you would get to understand how does the market work, why does it do what it does, and again, it's always random. So let's now start with the RTH Open, and these are structured trades. Now, here's the thing about structured trades. These are available to all of you in the Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. If you want to download, there's 60 PDFs of the trades. Here's the thing about trades. They may or may not be appropriate for you. They may not have the range you require based on risk, getting risk neutral or trade management. They may not fit you at all. In the Trader Lab, the idea is to find what resonates with you, kind of what your groove is, if you will. I don't use any indicators. Doesn't mean you can't. I don't, because I want to be here. I don't want to be waiting for something and I don't, the cross or whatever. And I personally can read this. This is a language. And all the indicators are, so you know, is they're just translating price action. But because they're looking backwards, they're not here. They're not going to respond. And even then, we don't know what it means unless we understand market mechanics. It might just be a little counter rotation, or it might be a short that goes to zero. How do you differentiate? Well, this is what Trader Lab is about. Because it's the indicator is the tail of the dog. It is not the dog. The dog wags the tail. The indicator does not wag the dog. I think that should make sense. So let's look at the first trade. Now, some of these trades I take, some of these trades I don't. It doesn't matter what I do. I have my own plan. I also take trades that are not here because I have different approaches at different times. But for this stream, I stay primarily to Trader Lab structured trades and advanced derivatives. So you'll kind of get a sense maybe of what this is about. And again, thanks for visiting Trader Lab. The first trade, and remember, our target up above is 53.58, maybe. So this is the retail price from the ETH. Remember, highest volume. So this is what we get. Now, here's something to write down or at least think about. Whatever the first directional move is. Now, remember, the market sold off yesterday going into the close. So I anticipate a couple of things. And of course, anticipate doesn't mean predict. Big difference. I anticipate if I get selling first, I want to use the selling to become a buyer. And the reason is, if I get sellers and they get trapped, over the opening swing high is going to be buy stops. That'll take my trade up. So I'm looking for longs. And again, clueless. And by the way, write that down. Why? Because if you think you know, you're in the wrong business. The business is not knowing. It's anticipating and then taking, you might say, an educated guess. And the educated part is vetting. By the way, the current trades I've been discussing, which is not that important, I'll get to them, are shorts, posting in the Trader Lab. But currently, in the morning, it was longs. So let's look. This is called VPOC migration. This is the opening trade, and it's a very aggressive trade. I always tell traders in Trader Lab, when you're developing, these are not trades you should take, at least not the early ones. But if you have a vetted plan, you would be anticipating a long. So right here, the market opens. This is called the developing volume point of control. And what they are is very simple. This starts at 0. It's a measure of volume. So when you get this consolidation, if we're starting at 0, most of the volume is here. And then the sellers take control. This now is too high. I pause and consolidate. There's more volume here. Now, when you're moving like this, the volume is in here, but it hasn't paused. Now the volume catches up. This shifts down. In the language of the market, this is too high. I'm going to, and I call them variable high volume nodes. I do this every day because the market is random. Something's got to be consistent. So you as a trader must, in my opinion, be consistent. The comparison is gaming. Hold on one second here. I got to make an adjustment to something. Hold on, guys. Okay. Got to take care of business, if you know what I'm saying. Okay. Now let's continue. So, boy, I don't like the trade stream. It's like, makes me nuts. Okay. So too high. So the market's going down, and this is the language of the market. And if you think about what's going on here, this is what I'm doing is tracking the interaction of the participants. So I'm using the auction, the volume profile, auction market theory. I'm not paying that. Too high. I'm leaving the store. Go to the next store. What do we think of this one? Nah, it's too expensive. I'm not paying that. And they leave. That's one part. The other part is the order flow right here. I see a buyer here. What happens to this buyer? Absorbed. I get sellers beneath. This guy is out there basically waving the flag. Hey, where'd everybody go? Over here. What happens here? Of course, there's buyers and sellers. This is delta. Delta's aggressors, and it's made up of market orders and stops become market orders. That's what is in delta, aggressors. There's also a passive side that we cannot see. That's what happened up here. The passive side, the guys who are just hanging out in the limit order book. You don't see them. You see what happens. If the aggressors run into passive sellers, and it could be an iceberg or nothing that you can see, and they're absorbed, then basically these buyers were absorbed by sellers and there's no buyers above them. You get this. So that's kind of how this works in order flow. Oh, our short is still percolating. Okay. Sorry about that. Try to stay on point here. This multitasking is rough. So, too high, I'm going to label it. Let's watch. And then I'm going to try to speed along. There were a lot of trades this morning. I'm going to show them to you. And again, this is structured trades. The way it works if you're in Trader Lab is once you understand how it works, you decide where and when you want to trade. It's really important to understand market mechanics. And the structured trades that I shared in Trader Lab and those 60 PDFs are a way for you to stay in alignment. So let's look. Market comes down, too high. Here, right here, going to 0, right, Lewis? Look at the behavior. Drops lower. Sellers. Drops lower. Or maybe not. What happens here? Breaks high. This right here is suggesting to me maybe, and this is the joy of all this, maybe it's too low. So I'm going to show you the first long I took. Now, variable high volume node, VPOC migration. Let's look at a language. Too high, migration. Too high, migration. No. Too low, migration. Now retail. This is rejected. I see this volume. You guys see support resistance. I understand. I see it the same way, but I use a different variable for it. I'm seeing the auction. In this little behavior, this chop, which creates a little consolidation that looks like this, and there's micro high volume there, which is variable high volume node. I'm going to put a little line on this so we can, I'm going to try to put a line on this. Hold on. Let me make sure everything is percolating here. Well, just 1 second. I got so many cables here. This should work. Not working. Okay, 1 second. Okay, sorry about that, guys. I wanted to draw a little line for you here. I can't draw. Drawing tool's not working here. So this is a variable high volume node, micro high volume structure. Remember where this is. This is too low. Now, watch. So the first trade I put on, and this is, again, not saying anybody should do this because I take stops like everybody else. So I come down here and I check this level. Right here, I'm thinking, well, this is too high. This is retail. This is too low. Here, I have my micro structure. So let's watch. I break, I come down. Right here, I'm thinking we're going to zero. Look what happens here. High volume, break high, into resistance. This moves down. This is very subtle. Right here, I test this, I test this, and this sets up a long. Now you got to get long. That's the other part of it. So, watch. Right here. So break high, too low, right here. This is where I got my long. It's only 42 seconds in. You might not be able to deal with this and you might get nauseous. I understand. So let's watch. Where am I going? Here, overnight high. These are structured trades. Now, this was interesting. I scaled and I'm thinking, oh, darn, I should have. What do you think when this happens? I should have got out. Who is that? That's the lunatic that occupies your brain. I call him or her Hyde. Where's too low? Let's come back. Where is too low? Here and here, right here. Where's my stop? Under here. Now, I break low, and I'm thinking it's the end of the planet. Let's look. What is this in Trader Lab? This is too low down here. This is my last retail price that was too low. Support, support. Wish my little thing was working here so I could draw lines for you. I don't want to mess with it and take time away from our very precious and limited time. So this is a variable high volume node. So I draw these as a form of support and resistance, right? Because of what it says. It's not an indicator. It is measuring volume. It's not telling me to buy or sell. What it's telling me is what the participants thought of a price. And it doesn't mean anything more than what might happen. If you look up here, 1 second, guys. Uh, something weird. All right. Okay. So this is micro high volume here. This is a consolidation. This is up at the ETH high, which was a target. And we have a target available on top. So this was too low. This is too low. We come back and test. I see a seller here, and I see buyers above. This is absorption. In the micro subatomic level, you see how the buyers were here? This is a micro consolidation, and it's right here. This is what's important. The alignment. The alignment. I see my buyer. I pull back and test. If you're in Trader Lab, there's a couple ways to deal with this. Nothing, or it's an ad, and you have to clear this. Or you wait until we clear this. Here's reaction here. If you got long here, this is where it was too high. If you take a long here or here, your stop is here. These are all possibilities. You got to scale there. Why? Same thing as in a fractal. This is too high in case we don't get above here. Okay? And if we do get above there, then it sets up our next target, yesterday's high and this. So those are the targets on the long. So that's the long side here. So you could see the behavior. Yesterday's high, target. Now let's watch. Pull back to mid and VWAP. This is a potential long. Why would you take a long here? ETH high, mid VWAP, and what is this? Here I should say, this one. This was resistance, wasn't it? That was a long. This is resistance. Break through yesterday's high. Old concept. Resistance becomes support. Plus, we had absorption here. There's more to this if you use order flow with it, which I do, because this was too high. Buyers were absorbed here. Here, there were sellers against this. They were absorbed by the buyers. Break high, pullback. This is a potential long from here to there. Or you're just hanging out and working on your crochet. We come back here. What is this? Buyers absorbed here, and this was resistance becomes support. Where are we coming? Back to here, the high volume. So we can just hang out. What does this do? Rotates outside. Now, this out here, I was looking at this one, and I'm going, well, I still have a high, well, to me, it's a high probability target here. So this is an aggressive trade. I wanted to point it out to you. Let me explain it to you. It's more advanced. And naturally, I don't recommend anything because everything is random anyway. So this is a long. What happened here? Micro high volume structure. Buyers here, sellers here, sellers here. This is absorption. And you don't know until the buyers are above it. If we come back to where the buyers absorbed, then there's a possibility, and that's all you got, is that the buyers who are in here, and you see red bubbles, that's selling delta. Selling delta means, yeah, there was sellers, but if we don't continue, it tells you that they were absorbed by the passive side. That's called absorption. And now you see the aggressors, which are the buyers. So I know this area right here is too low in this. So this is defined by this box. So I pull back here. Now it looks like it's out in midair, but it's not really. Let's look at what this looks like at the time. We pull, so this is too low. This is too low. I accelerate. When you accelerate, what it does is it leads an outside edge. This is called a low volume node. I'm going to mark it. Now, anything can happen. So guys, there's nothing mechanical. I know most of us want red light, green light. Believe me, I tried for years. And lots of times what I got was red and green and always yellow. So, and it's always going to be that way. It's always nebulous. But this acceleration creates the low volume node. And what this is representing is what's called a rotational trade or consolidation. And there's a name for this. It's called mean reversion. And all it is reverting to the high volume. That's all it is. So that's what this is here too, reverting to the volume, which was there, you see? So when I cross above, so let's look now. I pull outside. Where do I come? Out here. What created this? It's a little more advanced. It's more nuanced. But if you took a long here, and here's the sellers, let's remember, the sellers were here, absorbed. The buyers took over. The sellers were here, absorbed. The buyers took over. What is under this swing? Sell stops. The sellers come back here. We get below here. 89 stops come out. Thanks for playing. If you keep your stops like most retail traders do, there's a good chance you'll get picked off. And if you're someone who thinks they're after your stops, I'm going to suggest not really. That's usually how we rationalize not having a vetted trade plan. You would understand, and I'm not saying it doesn't happen, but that's not a good reason to keep doing something that doesn't work or is inconsistent. And by the way, the market's random, so everything's inconsistent. But if you know this is a swing, if you put your stop there, it's probable that if we get this, all the longs who have their stops under these little swings here, here, and maybe even here are going to get taken out. So I know this is where the absorption was. That's what I know. I know if I keep my stop under here or under here, I'm pretty good. If I come out here and I take these stops out and I'm coming out to a location and I have remember, what do I have? I have a target. And I see absorption because there is absorption here and absorption here. I'm trying to show you all the pieces. If I get long here, this is my scale, and then I'm holding for the next target up. Pull back, teeth chattering, so I get risk neutral here. Stop can go under here. Why? They were absorbed. I'm just taking you back into the rationale. And this is the target. This was the end of my trade. Now, there's a thing that happens to me, and that is when this is happening. Now, here's another piece, by the way. I'm seeing, better pay attention to my trade here. Hold on. Oh, 53.05. Okay. I'm flat. Sorry. But we'll talk about the short too. So anyway, we get here, we pull back. Now, right here, I looked at this. I took this one here. And, but here's what I know. This is my micro high volume structure. It's here. You can see the high volume. It's up in here. Right there. And it's in alignment with this. This is the first hour's high. So right here, I'm thinking we're going to potentially continue. So right now, so the trend is up for me. So when I pull out here, this is my volume point of control, VWAP and mid. So I took this trade, and this where is the last place it was too high. All these icebergs absorbed the buyers. This is the absorption detector. So I'm seeing all the selling. So I know there was a lot of selling coming up to the target. So I know if this might be too high, but I don't know if it is too high. This is part of the joy of trading. It's like, I don't know, because I don't know. So I don't put myself, remember, prediction, not part of the business. The best you have is maybe, and it's always uncertain. Now let's come back. Let's come back. I got to take you a little further back in the world. Absorption was here. Absorption was here. Coming back, I'm checking the retail price. And here, absorption. So I know that an absorption was here. So I know the buyers were interested above these guys. This was a stop pick. In other words, we just took these guys out and, fine. So that's why this is a long for me. And where's my resistance? Let's come back. Where's my resistance? Here. Here. Right here. The volume. You could see it there and this. So I have this, and I have this, and I have this. So I have these levels. Now this sets up a short, but for me, the trend is up, and at this stage, it's still longs for me at this stage because it hasn't broke yet. So I take a long here. My objective then is to come back into the high volume. So I have high volume here. I got high volume here. I got volume up here. So you could kind of see it. So I get this, I get scaled, and now I'm going for back here and maybe out the top. Market comes back, takes me out. Now I'm out. Now, once I break under here, the context for me has changed. Context is the condition of the market. So it was longs, longs, longs until I got under here. You'll notice the volume point of control, I've always been on the long side of it. But let's remember what this is. This is the same as the volume point of control, except it was left behind. It's an artifact. Once we know, and we don't know until we know, and that's hindsight, this is too high, and it's a suspect, and it's not unreasonable to come back and check it. Well, we didn't quite get there, There's no precision in trading, Now, and I'm not talking about trade management. When I put a trade on, I manage the trade, and sometimes that works great, and other times not so much. So, subject to your plan, and I post this in Trader Lab, you would be, I'm just looking at the current market, 05 was my exit. So. And that's a structured trade going the other way, which I said at the top of the stream. So we'll talk about that. So anyway, this trade failed. I got taken out. So by failure, it means, I got some burgers and a few other items based on how I managed the trade. Now we break down. Now what this does for me, it says, okay, we are now in two-sided trade. So now what I need to be thinking about is, where are the longs? Where are their stops? Who's vulnerable? I hit my primary target up on top. So now I'm going to flip the barge around, and it takes me a little while to do that. And I'm going to be taking shorts going for the first hour's low and 53.05. So that's out here and down to 05, which is right there. This is my target, and that I'm done. So right now, that was my last trade, and it took a lot longer than I thought it would. And these are structured trades. Now, this might be too armchair for you guys. What I tried to do, and I'm just talking now, this is personal plan. I'm not suggesting it should be anybody's. I tried to catch the larger rotations. And I'll tell you why. When I used to trade high volume scalping, I didn't really get to reduce my risk. My risk is pretty constant, 2 to 3 points, unless it's like it was yesterday and the day before. Then I'm running 4 or 5 points, subject to, and that also is commensurate with rotations and volatility. So now that the book is thicker and things are a little more normal, if you will, I've readjusted, and that's part of a trade plan too. So, like for example, let's look at this. Okay, once we break below, where do I come back? So if this is a long and this is a variable high volume node and it's yesterday's high and my long fails And I remember, as long as I'm sitting above here and above here, I'm doing okay. And I break down and I come back here. What am I going to do with this? Variable high volume node, microstructure VWAP. I took a short here. And I'll tell you what happened here. I took a short. You'll notice this was from earlier on. There's a variable high volume node here. So the way I kind of operate with these things, I trade to volume. It's just my mentality. It's because to me, volume is what really counts. The sellers were absorbed here. The buyers absorbed here. So that's what creates support. This is my short. Here's the trigger. I see my buyers. I see selling icebergs. I see absorption here. So I'm looking at this. I see this, and it's going to the moon, right? What do I see here? Icebergs, sellers. What's too high? Here's my micro structure. Here's my sellers. This is a short, or this is a short if you can read it. It's all up to your plan, you know. So let's assume you get short here. Your stop goes here. This is a target for a scale, or this is the target for the scale, the variable high volume node. Then it's continuation down. And at this point, 9:30, the IB gets set, which is the first hour high or low. There's over a 90% probability we take one of them out. Considering that we rejected and we got our target, I'm looking for this. So I am looking for this to get taken. That's part of this trade. So I'm sitting here short. You know, that's it. I see a stop sweep here. 1,000 stops come out, and I see buying icebergs coming down and the absorption. So I'm thinking, okay, let's go. Because what's under here? Sell stops. So I'm thinking, okay, got to get you now, right? Watch. I get taken out. And I'm going, huh, look at that. So now I'm back in two-sided trade. I'm going, well, okay. I got to find, and I'm confused. When this starts happening, I get confused. I'm just telling you about me. Because this is a low volume node. Remember this? I was getting long against it. If I fall out of a distribution, which is this thing, and now I'm auctioning back down here, this is an outside edge, low volume. So my trade was from here outside, and this is my resistance, okay? So, and that's what creates my confusion. And when I say confused, all it says to me is I'm now, the alignment has changed. And I use the term confusion because I'm asking myself, well, what's going on? You know, I know it's two-sided. I know I hit my upside target. I know I've got sell stops under here. And we didn't get there. Where did we go, you ask? Overnight volume point of control. Retail from the ETH. Right there. Too low. So if I would, and I'm going to tell you, I missed that. In other words, it just slipped by me because my eye was on this because the longs have their stops. This is the more material target. So when we got here, my trade was to get under here. So I'm just saying that's what I was doing. So I got my scale and then got taken out of the trade. Now I looked at this and you'll notice, I want to show you structure. I'm going to bring you back here. And then I'm going to come up for air and look at your questions. Thanks for your patience. I just want to try to run through this stuff. This is the outside edge of this distribution. So a low volume node. It's resistance. So if this is too high and I rip below and now the outside edge is here, if I come down and don't break the first hour's low and come back out here, this is resistance. So I can come out here and then continue along. So for me, this trade did not fail until I got out here. And then of course, and you can see it tested here and I'm going, okay, we're all right. Don't get concerned. You got them now. Yeah, you're good. No, out, back above here. So that's where the quote confusion comes in to me. And then I'm going, well, I'm now over this. That is going to merge these together. So now I've got a big two-sided range. So let's come back and let's try to look at what was too high. Here, here. So let's just see what happens. We have this and we have outside edges and we don't know where. Okay, and this, I'm going to tell you right here, I get confused. This. So let's come look at the auction and see if we can glean anything from it. Too high. This red line here is an iceberg, and he's been chasing it around. I don't know what this guy is doing. He's like following it all over the place. So this is an iceberg. I think it's on autopilot or somebody flipped the switch and left them going. These are my areas of resistance, there and there. And where do they come from? They're coming from these consolidations that happened back here. The behavior that you're seeing in these microstructures is the same thing that created that, except these are called fractals. So this is the daily or RTH time frame. It was a fixed area of volume at the end of an RTH day. This is in the developing time frame today, and the consolidations are really the same principles. You can see the little volume there, and there's a little node there. So what I'm doing is I'm looking at microstructures and if you think of how this might work, it is the shoppers in a store going, what's too high, what's too low, what's retail? And if they're not going to pay it, they leave it, and then they start the same process at a different location. If it's too high, like there, they leave it. Now we're down in this store, and it's a microstructure, but they're inside of each other. That's like Russian dolls. So it's too high. So I have resistance here, I have resistance here, and I have no clue. So clueless. But what I do is I mark them, and then when if the market comes back, then I'm going to be looking at what happens. So let's look here. So I have my buyers, it's going to the moon. I have my levels, and I don't know. I see sellers here. So I've got my buyers under here. I got my sellers here. Buyers push back. So right here, the question becomes, these sellers, are they going to still be active here if they think this is too high? We know this might be too high and this might be too high, and we don't know anything else. We're all clueless. Don't worry about it. Clueless, not ignorant, clueless. The buyers are here. If these buyers can't take out these guys, then they are being absorbed. What happens here? I break. I see my sellers. These guys now were absorbed. That's what I know. The buyers are here. The sellers are here. The buyers took their shot here. And if we don't keep going and I see my sellers again, that means the passive side was active. And unfortunately, you don't know until you know. And right here, if we can't get back over this, there's big trouble in River City for the buyers, sellers. So all these are shorts. Pullback to where the absorption was. So right here, you've got your sellers in here. I wish this red thing was not so bright. So you can see the microstructure. It's right there. And you got this and you got this. So let's just see. So what I do is if I put a trade on, no matter where I get in, I'm going to look at it. I'm going to say, where does this trade fail? Well, it's going to fail above here and above here. So if I get short here, my stop's got to be out here. That's more than I'm willing to risk. So what I do is when I observe the behavior, I put my little line on, and then I look for a retracement, which would be here. And then my stop has to be out here. If it doesn't fit, and this is a big risk, right? I don't have a trade. So if it's going to go to zero from here, I have to wait for another location. What I get is back to VPOC. You see, so I'm seeing the behavior. Now I break below. I don't get back above. So you can kind of see the symmetry. Now, if these trades, if you can't take them, that's not your trade. Doesn't matter. There's so many trades. VPOC migration. Does this look familiar? That's a short. So this trade, so I took a couple shorts in here, and the last short I had was to take this out and to come down to this. So that was my target. That's the last trade I had on, and now we're real time. Thanks for your patience. I'll come up for oxygen now. How we doing in YouTube, guys? Hope you're getting something from this. If you are, there's a thumb up in the bottom there. Please give a thumb. By the way, remember 95 was a target from yesterday. It is still relevant today as this is. This is now mean reversion. And this is also a Trader Lab trade. The target is going to be mid in this, not a recommendation. Now, that's in hindsight, so that doesn't do you any good, but I don't call trades. But I do want you to understand market mechanics. So let's talk about this. This is the initial balance low. We have two trades here. One, and this is actually, there's three trades here. This, and these are all available to you in the Trader Lab, so you can look at these. So remember, I don't call trades, so it doesn't matter that I missed this one, but I am current now. So right here is our target. 95 was a key target coming up yesterday, and if you're in the stream, and I posted the stream, it's available to all of you in YouTube, you can see the long trades coming up to this target from yesterday. And it's the same concept. This was retail yesterday, highest volume in the RTH. This was a naked volume point of control, same as the high of the day, but yesterday, so it was a target. When we tested it from above, it was a long, and then we put in yesterday's high, which wherever that was, okay? Now, this is too low, this is too low. Overnight volume point of control, remember, was too low. That's this. So we opened, went down, and north. So that set up all the longs. Now we're on the other side. That's the target coming down, same as the target going up. Now let's look at rationale. If we check a target, and remember, these are areas. Now, when this is happening, I have no idea. I want you to really understand I am clueless. And I use that with all humility because I am clueless. I see sellers here. The buyers took them on. I'm under the IB was a target, and then this was my target 05. All of this is posted in Trader Lab, of course. Now I'm coming down, and I don't know. So I'm looking for a long here and here, okay? And I'm just sitting here. I don't know. Now, I'm not taking it. I couldn't take it because I'm with you guys. But this is where my trade is. So I'm looking. Here I see a buyer. Sellers, buyers. I have micro high volume structure here. Let's take a look at this structure. Okay, try something else here. See. No. Don't like it when tools don't work. Very annoying. Okay, So in here, chop, 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 break high. This is a micro consolidation. You guys have been watching the stream. You kind of see what I do. I take the consolidation and I'll throw a little box around it because that's all this is. That's all this is. So I don't know here. So here, down, up, down. Is it going here? I don't know. When I see a stop sweep here and I break high and I break high, now I know my high volume is here. This is important. This is a fractal. So this is the main kahuna right there. Right here. So this is setting up a long, and its mean reversion. The IB low is going to be the target. This is a trade. There's two trades now. Remember I said there's a couple of trades. This is your target, by the way, not a recommendation. Now there's a couple of trades here. So you have the long to here, not a recommendation. Did it get there? Pretty close. So this is the target. Now there's two trades. So you have the long out of there, if it fits your plan, to here. And by to here means this area. You could just as well bail out of the thing, under here, or you're holding it and your stop's out here. It's all a matter of your individual trade plan. Now there's two more trades. There's one called the IB continuation trade, which would be coming up into here and a short, or here's part of the joy, or we come in here and we come across back to here. So there's two trades, long to here, and this trade might be over. I have no clue. This is where trade management comes in. Short back to here, or long back to here. Now, I'm saying or because that's the facts, Jack. It's or. So then what you do if you're in Trader Lab and you have vetted this, of course, as be part of your plan, you now have a narrative. It's called if this, then that. If not, then what? If I come back above here, if this, then that. If I get there and I get selling, so if I don't come through, mean revert here, then what? Then continuation back down here. If I come through here, then the next trade is probably here. But what is the condition of the market? Isn't it two-sided? If the market, and this is the thing we don't know in trading, part of the joy. This is your target, don't forget. So the behavior here on this long is very key. Now I suspect, well, my suspicion doesn't mean anything. I just trade. You know what? I'm going to tell you what I do. I don't know what will happen. I cannot predict. What I can do is know where it might happen, and write down the word might, because the best you have in trading is maybe. The outcome of any interaction is random. We all take stops. It's the way it is. Casinos just play the games. The cards are random. The way the gamblers play the cards is random, but they have anchored inputs. They don't make it up. They don't know the outcome of the next hand. The gamblers walk out with cash, and the games that the casinos play are anchored. They just play blackjack always the same way. It's the only way they realize their edge. They're not using variable inputs like we do. They're not using multiple time frames. They're not using a smorgasbord of indicators where if you throw more against the wall, maybe it'll be better. It doesn't work that way, in my opinion, in my experience. What I found, and it was very hard for me to strip all of that away because I spent so many years, quote, trying to make it better. And I actually did a webinar on it called Trader Groundhog Day. That's when you work hard and you keep doing the same things. By the way, there's right here, stop sweeps, selling iceberg, right here, potential short. Now, I'm not calling it as a trade. I'm saying it's potential. Here's how this works. If you come up here, remember, there's two trades. This is the target for the long. There's either the IB continuation trade back down here, or, and this is the short right here, or you come back through here and it sets up a long. And I take both of them. I just let the chips fall where they may. Remember the word chips fall where they may? Why is that? Because we're in a casino. The thing is, do you want to sit with the house or do you want to be with the gamblers? Now, everybody takes risk and we all pay. The casino pays the gamblers. They pay for the cocktails. And when they give you that ticket to the buffet, they pay for that too. And maybe tickets to Adele. And they still extract dollars from the gamblers in a random distribution of outcomes. That's our business. So if you took the long, this is where you're going. Then if you get a structured selling structure, which is what this is, right here, you can see the micro structure there. Let me open it up. So we have sweeps, buyers, absorption, micro high volume structure, break. This is a trigger in the trader lab. You would take a short, you'd put a helmet on, and where's your support? It is here. You would scale to get risk neutral. Your stop would be here. Now remember what I was saying. There's there's three trades, right? The long to there, and either continuation and mean reversion, or a short for a continuation trade back here. That's the trades. Nobody knows. This is a selling trigger. Questions, guys? I hope you're getting something out of this. Please give me a thumb up. In the bottom of YouTube. How you guys doing? You have questions? Yeah, Tony, you'll be able to review this stream. Guys, if you're interested in these streams, if you're in YouTube, there's a link in the bottom of YouTube. These streams are available exclusively to Bookmap Discord Trader Lab participants. The Trader Lab is a community of traders who've come together to leverage their collective experience. We can all get better. This takes a lot of work, guys. Doesn't matter how long you've been doing this. I'm going on 45 years. I'm still doing replays. I'm still watching streams. I'm still trying to get better. If I can shave a tick or two off and execute better in a more timely basis, it's worth a lot. You know, over a career, if you sustain a career in this business, there's thousands and thousands of trades. Think what a tick is worth in anything, or two ticks. You can lower that average. What does that mean? Those are dollars that you're basically leaving on the table. I prefer to keep them over here versus leave them on the table. Unless you want to give the dealer a tip, but that's besides the point. This is a structured trade here. This is a short. So you're short. And if you look at this, if you get this trade on, wherever the trade gets on, this is the stop. So the distance from entry, this is why entry is important, to failure is your scale to get risk neutral. Now, the way I do it is I just I hang out. If this thing can take out this, then I want to be out of the trade. If it comes back and tests it, where is it too high? It's right there, that little micro high volume that happened right here. So as long as I stay under here. Now, there's also another thing I know. There's stops here. That's why I have to get risk neutral, and that's what it's called, risk neutral. And if it fails, it fails. My broker sends me a gift basket, and that's that, and off I go. So this trade is on, and there's nothing for me to do. Now, subject to my plan. Now, if I get taken out, I'll always scratch. I'll dust myself off, and I have another trade. Depending what happens here, I then would put a long on, and these are not trade recommendations, to squeeze the mid and to come back here. Remember, there was two trades here. A short here, and if no bueno, and I get taken out here, and I'm going to have to look at the behavior right here. I'm either going to put the short back out again because I got a low volume node there. You see this little right there. You see this? That's a low volume node. This is a distribution. So basically, outside edge, I can pop the outside edge, take these out, and then continue down, or break above, check this from the other side, and go this way. I already know that. So unless, and I have to, and I'm prepared for that. When you have a trade plan, you cannot predict what will happen, but you know what you'll do before it happens. It's the thing about trading, at least my experience and what other traders in Trader Lab do, it's about knowing what you'll do before it happens, not predicting what will happen. You're not making it up when you're in a state of dopamine and adrenaline and fear and all the juices are flowing in your head. That will derail you. We have a term called Jekyll and Hyde. Hyde's the lunatic. And who is the lunatic? It's the fight and flight primal wiring. That's the voice in your head. You ever listen closely to that voice? What does it say? I better wait. Be more certain. That's fear of the saber-toothed tiger. You know what? I'm going to move my stop to break even. This doesn't look right. Well, does this trade look right? No. Looks like it's going to fail. What's going on in my head? This trade's going to fail. Why do I scale to get risk neutral? So the trade has to fail, not my emotions dictating what I do, my fear. How many times have you moved your stop to here and you get picked off and then all it is stops and then we come back down again? Has that happened to you? Happened to me. Happens to all of us. And then why do we do that? Is that based on the business or the fear? And let's not be childish here. We're all afraid. And we're afraid because it's primal wiring. That's why. So if you can learn, and you got to journal, what goes through your head? That voice in your head, and I call it Hyde, is always whispering in your ear. If you were and if you got in here or wherever you got in and you pull your stop to break even, you're out of the trade. Is that how you get paid in this business? I don't think so. This is where the trade fails. Does this make sense, guys? Are you following me? Please give a thumb up in YouTube, by the way. First, it is a IBC from here. Trades risk neutral, stop is here, and we're going back here. And that's it. That's a target. And why would it be the target? It was too low. Now, we may never get back here. So what we need to be thinking about is this, and where's the next location? It's this high volume area here. I'm going to put a line on it so you can kind of watch it. And this is thinking in fractals. So if I'm coming down from up here, I need to be conscious of this and this, and who knows, right? So let's just see where it comes. So this is our short, so we're just hanging out. That's why when you're building a trade plan, you've got to go back and do research and understand market mechanics. You are a retail trader, and now so am I. One of the things I learned early on, in fact, I built one of my early trading systems that I built, and this is in mid-1980s, I think it might have been. I called it the paper chase. Because on the floor, we used to call it paper. You know, where's the paper? Where's the paper? Where's the paper? Well, the paper was sitting up here, you know? So the stops, the fuel. And I built this system. The idea was that it would trade into stops. And I learned that because where my stops would get picked off. And it was because I was doing what other people did, right? And I didn't understand, of course, except I started, seeing behaviors. So I actually would trade in, make these targets. So I would be trading, fading. You know, it was like kind of a counter trade thing. So I learned that I don't want to do what other traders do because they lose. And I lose too. Okay, I take stops. But if I understand how retail traders think, and write this down, and this is something that's always discussed in Trader Lab, think like a retail trader. Don't act like one. Where are their stops going to be? Here. Well, here also. What do retail traders do? They micromanage. What happens to them? They get taken out. Where does this trade fail? Above here and above here. So for me, if I pull my stop a little bit, I can pull it here. I can get taken out, or I can just leave it here and not get smart. I can't tell you how many times I've gotten smart. And by the way, who creates the smart? Hide, not trading, not the business of trading, not the mechanics of the market. Hide. So you have choices. This is where the sellers absorb the buyers. If we come back over here, we're going to squeeze. So there's two places. Here to have your stop now and there. That's completely up to you. Me, I'm not putting my stop here. Boom. You see? I know the sellers are here. They were absorbed. I know the buyers were here. They absorbed the sellers here and here. So the buyers are here. Sellers are here. So let's see what it does. And I'm trying to get here. Actually, let me look a little closer here. And you could look at this. You could see the volumes in here too. If you look over here, right there, that's a high volume node. I look at these sequentially. So subject to your fractal time frame and the number of contracts you trade, I use these structures for trade management because of the language. The language says, this is too high. This microstructure, there's the volume. I'm not paying that. Get out of here. Leave the store. Now we come back. This is too high. If I can't get back above here, where's my volume? This was too low. This is too low. This is too low. So I have this like a sandbox. So I'm looking at it that way. So this is a short, it's not a trade recommendation. And if you remember, if you're here for this, in the stream, this is the long to there. I'm okay with the long, I don't know about you. It's a 15-point trade. This is what Trader Lab's about. I'm not trying to go for these little, if I'm taking risk, I want to get paid. So let's watch. So we have this and we have this. So we have absorption here. Now I would be very, very, very observant right here. We want to watch right here. This trade could be done or you're managing right above here. Let's watch it. Remember, we're looking for this, not trade recommendations. There was absorption here, and that means I've got to be very alert. I've got a sweep going on here. Right here, I'm very close. And right here, this trade, look where we came. These are all Trader Lab structured trades, not trade recommendations. It's all random, isn't it? So we're watching here and here for trade management opportunity, right here. Let's get into the microstructure. I hope you're getting something out of this, Trader Lab. I hope you're seeing structured trading. And we're back here. So now, too high. This was too low. This is where we got our reversal. This is support, not a recommendation. For me, these are trade management opportunities. You got to follow your plan. Anything can happen. And 95. So this is trade management right here, not a recommendation. So I'll let you know a little bit about me. I don't care if it goes to zero. I do the following. I use targeting and I manage. So subject to the number of contracts, I manage the trade. And I could just as well be out of it here. Why? This is where the reverse started. that I had a buying structure in this location. And the trade can be done. Are you okay if you're in Trader Lab and you're taking the trades? These are structured trades. You can all learn these if you're interested in them. They're not for everybody. This was the long to there. That's a 20-point trade. This is the short to there. 20-point trade. Is that okay? 20 up, 20 down. Do you think you can make a living? That's just 2 trades, not including all the others I showed you from this morning. This is what the Trader Lab is. And for me, I just trade, I just take my piece and I'm very happy. So for me, depending on the number of contracts, I would be done and I don't care. Me. Or if I'm running more contracts, I'm using a trade management process. And this trade is probably over. I don't know. I don't care. Questions? This is Trader Lab process. And I hope you're getting something out of this. Please give a thumb up in YouTube. Cocobolo, the paper chase program, I built it in 1985 or somewhere in there. So yeah, long gone. It was a system. Cocobolo's asked me why I gave up on paper chase. It's so long ago, I just do other things. Yeah. I haven't given up on paper chase. I take what I've learned and I've integrated my understanding as I was developing my understanding of how the market worked. It was a piece of market mechanics, which you see me talk about all the time. I call it fuel. And back then it was based on, I used 15-minute bars. We didn't have candles yet. Whenever this was, and I can't remember now. I think it was 85 or something like that. Yeah. Can't remember. Might have even been earlier. I don't remember. So we're down below here. Remember, 95. So for me, this trade could be done. I could care less. If you have a runner, notice what we tested. This is what's important. We had this was absorbed. Here, the sellers took over. We're still going. So if in a trade management process, now I'm just telling you, for me, I don't care, but if you had more runners, this is the next target. And of course, you know this, everybody knows this because I've already been talking about it. This is Trader Lab. Guys, I believe anybody can learn to trade. I know most will not do the work, that they want a red light, green light process. I get it. We all want it. Believe me, I'd love it. I'd love to have, there's a red light, get short or take a trade. And then there's this little ATM and I have a little thing and it spits out the cash at the end of the day. If trading was like that, then we'd all do it. I know, I wish I could tell you, but it doesn't work like that. So maybe you can, in the Trader Lab, you can learn how the market works. And then, like the rest of us, you take your stops or pay overhead and cost of production, 95, remember. And then you go from there. That's it. There's a lot of work to do this. And the work is really, at some point, on yourself. It's not the indicators and the time frames, which is where most of us put our energy, because we think that's the answer lies there. That's not the answer. My experience is that's the problem, because we think it's external. And then we tend to put more indicators on, which are just backwards looking translators, to create certainty. So we gravitate towards more with an understanding that more creates certainty. And really the certainty drive, which doesn't exist in gaming, by the way, the certainty drive is based on psychological needs. So we have beliefs, and then we are directed by our subliminal or emotional processes towards a direction and a belief system. By the way, you can believe it, and that's okay, but out on the world and the planet, it works really well for us. In the trading world, we're not in that world. We're in a unique environment that is casinos. So that's where we are. 95 is the next area. Questions, guys? This is Trader Lab. Please give a thumb up down there at the bottom in YouTube. Yeah, Paper JT, Paper Chase was a show. And what was the guy's name? He was the guy who says, we earn it. Houseman? Anyway, so this would be the next area. Now, remember, statistically, and these are not on my radar, it doesn't matter. I gave you these stats at the top, and that was the previous settlement. And I can't predict anything. Remember, I'm not in the prediction business. I'm in the I don't know business. About a 70% probability, and the overnight mid about a 72% probability. So once we are under here, this opens up this, and the value area low if you're inclined. They're not important to me, but some do. It's about a 58% probability. All these are statistics. They're all available in the Bookmap Discord Trader Lab community, as well as the library of webinars and the PDFs of these structured trades, which you can reverse engineer. The thing about this business is, guys, and you're seeing this happen. You're seeing these trades narrated in real time, and also what has already taken place, because I need to always build a foundation. Every time I stream, I'm building a foundation of understanding and consistency in a random environment. The thing about randomness or uncertainty is every moment in the market is uncertain. And we are driven to create certainty where it doesn't exist. If you can change what your objective is, it is not to create certainty, it's to create edge. Casinos only operate with games that have an edge, and they play them exactly the same way. The trades that I was sharing with you, the long from here back to there, and then the short from there, back to there or wherever, these are all structured trades. You would, if you come to Trader Lab, your job to build a career is to really accept what doesn't work and not try to fix what might be a defective process. Trader Groundhog Day is something we all experience, and that is you see randomness and you think it's just a matter of making it better. The right time frame, the right mix, the right indicator, whatever, we all, and me, you, it's all the same. It's a generic thing. Most retail traders never get past that, and they run out of time and they run out of assets. I had to throw it all away, and it wasn't that I didn't try. Just about everything you guys have done, I've probably done, or some derivatives of it, because I've had more time. And it doesn't mean that there aren't other ways to get to the objective. But I think the more you can strip it down to its fundamentals and you can remove debris and conflict, the more you can then have a process that's clean without conflict. We have conflict and randomness. That creates conflict and emotional states. So if we can accept we have that, then what can we do in here to make it as simple as possible, as process oriented, with conditional statements and then routines, if you will, of triggering structures, trade management processes, and accept the random outcome. Can you do that? Well, that's what Trader Lab is about. And again, everybody takes stops. Every business pays overhead and cost of production. And if you're going to be in this business and see it as a business, you got to separate your emotional attachment to the outcomes. I can assure you, when the casinos deal the cards for blackjack, it's just another hand. And that's all it is. They don't change the game. They don't make it up. They don't have the emotional responses that we do. They are not saddled with caring. They are in a business. We are also in a business, but we're also attached. That's where Hyde comes in. If you're, like most of us, subject to Hyde, hijacking your intentionality, then part of that might be the randomness, not having anchored inputs, not having a vetted trade plan where you know where your trade shows up. We know where our trade shows up in Trader Lab. We do not know the outcome. Statistic, right? And this is open also, not a trade recommendation. Please give a thumb up in YouTube. Let me show you these PDFs. I'm going to show you what they look like briefly. You can see the trades, right? These are actual, this one is simulated. I think I did that. These are from many years ago. This is actual trades. And this is from 2020, you know? So Bookmap asked me if I would, I was getting a lot of questions about what do you do? So here's what I do. And these, I'm not a vendor. There's no specific course. The idea is if you watch what's in Trader Lab, the webinars, and there's a library of them in all different market conditions, you'll see the exact same trades over and over and over. Why would that be? Because the market has certain behaviors that you can codify. You don't need a lot of trades. We're not here to be busy. At least I'm not. I'm here to wait for the trades that will pay me over a large sample size, and I do take stops. I do take the long to there. That's a structured trade. I take the short back to there. And subject to the number of contracts, I could hold it or trade management. This is all subject to the individual, and go for another statistic or get taken out. It doesn't matter, right? Doesn't matter. Doesn't matter to me. Because I don't know where the low of anything is. This is why I accept I don't know. And if I trail and I have structure and I see absorption here, these sellers are being absorbed, and I rotate up, this seller's on the hook, and now my buyer's above here, this trade can be over. It doesn't matter. Or I'm further outside. What's your plan? I just take what I get, and the market is always, there's always another bus coming by. But these are 20-point trades. That's the Trader Lab. Now, if you're looking for action and to be a little scalper, and because you believe there's more accuracy if the target is closer, it's a fallacy. Your risk is pretty equal. Over time, your broker's going to send you on a trip on the love boat if you do that kind of trading. Again, my opinion. I used to trade over 100 times a day. And my partner, who was my broker, loved me. Because when I had a great day, he had a great day. If I didn't have a great day, he still had a great day. So, you do that for a while and you go, oh, maybe I should change my time frame. So I kind of went the other way. I'm not saying you can't do it, but we only have a certain limited amount of cognitive focus also. So I prefer trading less for more. This is what basically pays the rent, if you will. And how many of these, and all the trades I showed you today, if you had taken all those trades, and I think there was one stop, and that's assuming you follow the plan, and I take sometimes more stops at certain conditions. If I get out of alignment, I take stops. If the condition changes, I'm zigging and the market changes and zags, I'm not going to know I'm out of alignment until I see it in hindsight. That's just the way it is. Hope you got something out of this, guys. Remember, this stream's available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, screenshot, dissect, etc. If you're interested in Trader Lab, there's a link in the bottom of YouTube. You can visit that Trader Lab, download those 60 PDFs that I showed you of these structured trades. Join the Bookmap Discord Trader Lab community. There is no cost. There's a lot of additional education, stocks, options, crypto, order flow, of course, with a high tier tool like Bookmap, algorithmic behavior. I think I said crypto, options, swing trading, and a lot more. And it's all available. And if you have anything further, visit the Trader Lab, ask in there, say hi, say hello, And I look forward to seeing you guys tomorrow. And remember, Trader Lab, this stream's available exclusive to you. And if you come to Trader Lab, by the way, if you're in YouTube, there's a library of webinars, so you could see this. Some of them are up to 5 hours long of real-time narration in all different market conditions. The market gets directional, it becomes rotational, goes back to directional, and these are transitions. They all are specific plans inside of plans. Thanks again, guys. Please give that thumb up in the bottom of YouTube. It helps the channel. Remember, there's a link in the bottom of YouTube. There is no cost to visit the Bookmap Discord Trader Lab community and participate. Thanks again, guys. Appreciate your interest in the Trader Lab. This is auction market theory using a volume profile as a chassis and Bookmap order flow tools. I call it the tip of the spear. Thanks, guys. Look forward to seeing you tomorrow. Trade safe.